Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at potential hotspots in the markets for the day. It is Thursday, September 23rd. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple, Mr. Brian Caprice. Before Brian and I jump into some analysis, we do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what do we really want to talk about today? Um, One, we're going to just kind of cover what we heard from the Fed yesterday and take a look at the market's reaction to it because we're seeing a bit of an extension of that in the equities markets today from what we saw yesterday. So, yesterday, the Fed did say that they are going to start tapering, starting to purchase fewer assets. So, they're going to slow their asset purchase down. They're going to start in November. And that they're not going to do it, they're not going to rip the band aid off and do it all at once. They're going to slowly pull back that support through mid 2022. So they're being measured about it. They're not just trying to, you know, light a fire and run away. They're trying to be very measured about what they're doing. Some of the things, obviously, inflation is there, and that's why they're going to start tapering these purchases. But on the other side, there are some concerns around growth and around unemployment. And case in point, here, let me make this a little bit bigger so you can see it a little bit easier. Yeah, we just had, our weekly jobless numbers come in the states, and continuing jobless claims came in higher than forecast, and initial jobless claims came in higher than forecast. So there is a slowing to the recovery. We are seeing some impacts in unemployment. But at the same token, there's definitely some inflation. We know that inflation, we're seeing it in energy products. And I think we are going to absolutely take a look at nat gas today because there is the nat gas inventory report at 10:30 a.m. Eastern. And sometimes we see some moves around that. So as that was the tee up. So Brian, let's get into it. Let's talk about what the Fed had to say, what they're seeing, how the markets are reacting. I mean, why did the markets equities all just took off?
Mhm.
And then let's do some. Let's look at the charts on nat gas and maybe some other spots that we might want to look at where things are moving.
Yeah, I mean, it was kind of I don't know, I don't want to say disappointing, but it was definitely a very timid response. And again, the markets reacted high, very, very fast. Why? Because everybody had been talking about how tapering was going to be done. It was going to be done fast. It needs to get done before the end of the year, before inflation gets out of hand. And the response was, we'll start in November at the very, very end of the year, and then maybe we'll end by the middle of next year. All I got to say is if Jamie Dimon is correct, and I said it yesterday. Jamie Dimon is a very intelligent individual. He sees things from a completely different level than any of us can. But if he is correct, I'll tell you right now, the recipe for the election next year will be a complete sweep back again to the other side of the aisle because we'll go into a fast recession very, very quick because they'll have to make a move very, very quickly. Um, I don't know that I agree with the Fed, but I haven't agreed with the Fed in the last couple of months anyway. I don't think the market necessarily did either. I mean, we can drop this down to a 5-minute chart, and yeah, this is the Fed speaking right here. News came in right here in gold, and literally came up, grabbed the level, came all the way back down again within 45 minutes. And I think the market was kind of like, "Wait, what? What did you just say?" So I don't know that. It's one of those things. This is such a fast reaction. And again, these are 5-minute candles, guys. This is kind of unheard of in a situation that we're at right now. And again, pandemics are not something we deal with every day. But based off of everything we've seen, it's one of those things like they're still acknowledging that inflation is not here. We're going to run it out longer and longer and longer and longer. And yeah, at the end of the day, I mean, nothing really changes from today to tomorrow. It wasn't what kind of the market was looking for. It wasn't the inflation, and it's making people wonder, like, what are we not seeing? What are we not being told? I think is really what it boils back down to. Particularly for something like gold. inflation is why we start doing things. And you can see that gold's response was, we kind of initial pop, like, yep, we like this. This is good. And then all of a sudden it was like 2022, boom, right back down again. It's not moving to the level. And again, we came right back up and now it's starting to pull away. So it solved, it answered a lot of questions, basically like the timing of it. But at the end of the day, it's also, the numbers are not justifying the delayed response. So, and again, many of the Fed chiefs have said it. So it's kind of like, what's the driving factor behind this? I don't know. But overall, I mean, it will continue to be good for the indices because, again, if we're not changing anything, we're not pulling things away.
Well, they are going to
There's no
pull
reason.
things away. They're just not going to rip them away. So, I mean, they're not there. And so with that, there's still going to be some stimulus coming in, just less and less over the course of the next 6 months.
Well, it was supposed to be in this year, and now it's November, and everybody knows that there are delays a lot of times too. So we're really pushing into it. Many of the
Yeah.
Fed presidents and voting members were saying it needs to be in by the end of this year. Like we should be done. It should come in quick,
Oh,
and when we do it, we got to pull it. And
yeah.
now it's not even going to start
Well,
till
it'll
November.
start this year. It just and I actually had anticipated. I know that there's a lot of people who just want to see. Well, we just turn it on and off like a light switch. They didn't just. I just think that they don't want to be that disruptive. Um, to give the
Yeah,
economy time to digest all them as they move, it's like, and that's just my personal take. And I know there's other people who really just want to see the light switch. By the way, I mean, uh, flipping the light switch would certainly create tons of volatility, which is great trading opportunity, but I don't know if they want to really just shock people if it's not necessarily totally if they don't need to dunking them in cold water, they can put them in lukewarm water and then let the water cool off. So
yeah. I mean, this is the overall indices response to it. The overall markets weren't really sure how to take it either. I mean, it was straight up. Yep, that's good.
yeah.
Nope, that's bad. Nope, no, nope, that's good. Nope, that's bad. And then at the end of the day, when it's kind of like, all right, it's not till 2022. All right, so not much is going to change. Um, yeah, I don't know. I think at this point, it's the Fed is becoming way too political. I think they're trying to please too many people out there. And
I,
again, at
I
the end of the
actually,
day, they're not supposed to focus on any of those things.
well,
Things like climate
I don't
change.
know. I
Climate
think
change
the
is important,
markets,
but not for the
I
Fed.
think the market, and this is, and I know that we disagree on this one, and we're allowed to disagree on this. I think that sell off. I mean, we got crushed last week, and I know that everyone was
That
saying,
was
"Oh, it's
Monday, Todd.
contained." Yeah, well,
That was Monday.
it feels like last week, well, a bunch of lifetimes ago. We got crushed, and I know that Evergrande and everyone's saying Contagion, and I think Evergrande might actually go under, and I think China might let them. I think the markets realize that actually isn't going to be that impactful to the market, and I'm actually wondering if that sell-off wasn't in anticipation of people trying to position, trying to wash people out, expecting the Fed, what they might do this week, knowing that they weren't just going to light a fire to it and flip the switch, and they pushed the markets lower, got some people to sell, and then that just created a buying opportunity, which we saw yesterday, and then we're seeing a little bit of an extension of it today. In the equities, I think we're looking to open in the green across the board at the moment.
Yeah, everything's green right now, and there's another piece of this, and when I say it's political, here's why. China has major problems. China can keep their currency low. That's just what happens. You have problems, you're allowed to do that. You devalue your currency. It's what Japan does all the time to become an export nation. Export nations rely upon exports. They got to sell goods and services to other people. The United States, we are a buying country, but when you're in a recovery process, you typically devalue your currency, so your exports, the sales of it, stimulate your overall profits.
Right.
If the United States goes forward right now, we will be at an extreme disadvantage in overseas markets, and it will hurt us. So if China is weak, the United States has to claim that they are weak. Otherwise, we're going to start losing the overseas battles. China will be able to pick up all of our business inside of the European Union, and then we will be in even more of a problem. So instead of focusing on what their mandate is now, they're worried about the global politics of it all, of what happens, and now it's basically an us versus China thing, and that's what it boils down to. I mean, China is over here is like, oh, we're telling people, hey, prepare for them to, to disappear, right? But then, look at other people in the world. The UK just managed to hit their 2% inflation target. So it's one company in the grand scheme of things. Is it really that much of a global contagion? No. It's a great story. You can prey upon fear. And that's why everybody that's like, this is going to take over the market. It's the next Lehman Brothers that sold. Guess what? They lost their shirts on every single one of those shorts. So,
Yeah,
I mentioned it Monday. Find the bottom, buy it. This is a buying opportunity. And everybody I know was buying it. And now the markets are higher than it was at the start of the week. So, again, if you listen to headlines like this, understand you got to look behind the scenes, guys. You got to look behind it. And, again, the world's ending, but yet, right here, unemployment. Oh God, it's horrible. Really? Because the market doesn't care at all. Every single one of these is higher right now. So,
yeah,
they're all bouncing off of levels that we've marked before in the past. Looking at ES is literally going right off of that, that same level we talked about, the level of basing. It was tested back here on September 19th. The price level is right around, 44.20. We've seen it before, right? NQ, similar scenario. Look at that,
right.
right in the middle. There's 15,300. It just rolled off of that. And did it roll off of it at the bad news this morning? No, it rolled off of it at 5 o'clock this morning after the immediate UK push. YM
Right.
is the same scenario. We had a level over here. We had that Harry Potter. We knew there were
Look at
sellers. It
that.
went a little higher, and all it did was grab the sellers from this area right here, right? The area right above the Harry Potter, which again, sellers, sellers, sellers. It grabbed the middle section and did the same thing. Rolled at 5 o'clock, and what did it do? It actually liked the unemployment data because they know there's going to be nothing out. It's one of those
Right.
things. Bad unemployment data, you would think it would be bad, but guess what? All it does is put more money in the people that have money, in the markets, own shares, and it's just a bunch of lies, guys. That's why follow what the charts say. Don't follow what the news releases say, right?
Right.
You know,
Yeah, folks. Yeah, look for those opportunities and make your decisions. All right, so that is rather interesting. And then we'll see what the retail trader thinks when they
here you
get
go. Look,
into
oil's response to having higher than expected unemployment. Boom,
it punched higher. It
showing
punched
demand.
higher.
Yep.
Now we're also seeing that, by the way, in nat gas. Let's take a look at nat gas because we do have that inventory report at 10:30 this morning,
Mhm.
and nat gas. I was surprised. I thought nat gas, as the price came down, it did come down quickly. I mean, you could see the times where it dropped. I mean, we said it goes up by steps and down by the elevator. I mean, it didn't. It still it didn't just plummet all the way down. I mean, it did step its way down a bit. I'm surprised, but here we are, and we seem to have caught a bit of a floor, and we're seeing nat gas rise going into that inventory report.
Yeah. Oops. It's a long position. Yeah, this was a level we talked about it 2 days ago, I believe. Here's the. I mean, we're right about it. We just hit the 1 to 3 right now. So it's a level. It was a decent pop, and it had a little bit of a confirmation. The price came back down, grabbed those same buyers to confirm that they were there. And again, it hit it. It kind of went sideways in the overnight, which you typically expect. It's more of
Yep,
a big trading session. And then all it did at 3 o'clock this morning when the UK market opened, it sent natural gas higher. So
yep.
you know, I would say right now I would be looking for, probably more of somewhat of a top in here. I don't know if they've updated the forecast for today. Non-US. Yeah, I mean, you can see it's not quite as bad as it was before, but it's about where it's the same forecast as it was last time. And again, last time we had a big miss at the top side. So, you know, again, natural gas is one of those things that's a little bit more seasonal. Nothing right now with the price is really justified, being where we are month wise, and the fact that United States is the main producer of natural gas. So, the same strategy. And again, let me show this real quick. Just a review back again what we did the other day on Tuesday. Go down to the 1 minute. Here is there it is. Here's the new strategy, guys. Right? We talked about it from Tuesday, the one that I gave you. We talked about the basing. We talked about the holding. There's your holding right there on the 1 minute chart inside of a revised 30-minute level. And again, at the end of the day, what did price do? Price ended up much, much higher, but here's the news release trade. It ended up starting to move 1 minute early, gapped all the way past, and went all the way back down again. There was a binary over here, a shorter duration contract, a 10 to 12, that we were looking for it to get past 71.25. You can see it actually pushed down to 71.43, so it was in the money for a while. Again, hence why we don't hold these till expiration, because again, at 11:30, it decided to
It
come
just
back up
went the
again.
other way, right?
But
And
you can see
trading out of those is actually really important. Sometimes you just got to say thank you very much and move
Mhm.
on.
and it was a 1 to 5.6. So, great
Yeah.
risk to reward ratio on that one. And again, looking to take something a little bit farther out of the money. This one had about $20 risk, I think, when we got into it. Maybe a little bit less than that. Maybe it was like, I think it was like 18, maybe, when we are looking at the basing level up top. And when it came past, again, it was about 5 cents past. But
It
if
had
you're
to be
selling,
above 50.
yeah, it was
Yeah.
definitely above 50. Yep. So again, you got your 1 to 2, and really, I mean, you got it in less than 15 minutes. So, it
Now,
was rather quick.
before we jump, I did want to just throw this chart up here of nat gas and what we're seeing. Um, this is Fibonacci from last week to now, where it's made this move down. So high down to the lows. We're looking at some retracement levels, and we know that this. What is this price? 494, almost 495. It's the 23.6 retracement level. We also know that was a support level on the way down. So if it were to come up that level, this would potentially be a resistance level as it comes back up. So as this punches higher, I would be looking that maybe this is some resistance right in here, where before buyers had stepped in, you would expect to see some sellers step in at this level. Um, if and it's starting to get it poke up that way, but there's going to be some trading opportunity here in nat gas. And again, that report comes out 10:30 a.m. Eastern. Um, Did you wanna quickly, I mean, we talked about the equities, we've talked about some commodities. Did you wanna take a look at any of the FX charts, before
I,
we cut
I,
out of
I
here
would
for the
just say
day?
the two biggest movers right now. Again, we talked about how important news trading is. We told you guys yesterday, and again, watching this today, when we looked at the pound news that we had. I don't need that one. You can see at 7 o'clock this morning, we knew that it was going to be a major opportunity for the pound. We had asset purchases, we had monetary policy, which is also big. Did not expect any type of bank rate, but here was the response off of it. I can go down to 5. There's where the news kicked in, and you can see now. It basically, there's your 9 o'clock, right? Your 7 to 9. It's right there. So very, very quick mover based off of news that was about 94 pips off that level. So again, things like monetary policy reports and news are extremely important. Even on the shorter duration contracts, go look to see what the strike width is for the pound yen. And then, figure out yourself how many strike prices did that move? How did you know to take that? Well, it was a level that we had talked about. Again, pretty common kind of Harry Potter, right? We can bring it
Yep.
back to 15. Came up, base, came back into that level, and you're saying, okay, there's something that held. Maybe I can use this for news. And again, that pre-release news trade right before the news came out, again, brought us back down. And again, for the people that don't understand what Harry Potters are, it's when price breaks through a level, it comes up and it bases, it pulls back into the level,
You get your
and
little bit of a retracement. Yep.
yeah, and at this time actually it kind of stabilized right above, but then pushed back down again. So this kind of gave us a double, kind of a double push is what this one looked like here. Up, right, push through, came up, came up, and then came back down again for news. But again,
And then
being right here at news, that's an opportunity to take something long. And again, shorter duration contract binaries with a smaller strike width. This is a lot of binaries that it just blew through. Knowing, and again, if it did nothing, great. That's why we're using something a little bit farther out of the money in this range, right? A little bit
right.
farther up. But because you know that you had such high amounts of, you know, the pound's been beaten up, and we talked about pound strength coming in. But asset purchases, again, monetary policy extremely important, bank rates, and then hearing them hit their inflation target. These are all things that are extremely strong, and because of it, the pound yen is up 158 pips in 24
Yeah.
hours.
That's a move.
That's yeah, it's 1.5. It's basically just under 1.5 ATR, daily ATR in one day. So
Yeah.
big move.
That is a big move. All right. With that, if you got any questions for Nadex, please email us, customer service at nadex.com. Any questions for Brian, support at keeptradingsimple.com. What we kind of covered today and where you might want to be looking, we did talk about what the Fed had to say yesterday, how the markets are reacting. Equities markets liked it. We're seeing a bit of an extension of that today, although they have hit a couple of levels where they've rolled over a little bit. But there's going to be some volatility and trading opportunity in those equities. U.S. equities, nat gas. we've got some levels in nat gas. We've got that inventory report at 10:30 a.m. this morning. So get in there. The recording, by the way, if you didn't catch Brian's recording, it is going live on our YouTube channel. I think within the next hour. So you will be able to review the boot camp recordings. You can go right to Brian's and check out what he had to say about trading around economic reports. Namely, look what's going on in your 30-minute charts coming into it. As you get closer to the report itself, drop down to 5 minutes, and then right before the report, drop into a 1 minute and look for those opportunities where there is basing and then a move, and there you might find some opportunity there, particularly in those short duration binary options. And then lastly, we've seen pound strength, and we've seen the pound making some moves based upon their economic numbers. So take a look at some of those pound currencies, particularly the pound yen, which just absolutely took off. Brian and I will catch you again tomorrow morning. And thank you for joining us. We will see you tomorrow morning. Good luck in the markets, everyone.